All right, buckle up, everybody, because today we are going deep
Right.
into Mark Minervini's Think and Trade Like a Champion. This book, seriously, it's like a cheat code
Yep.
for trading success. We're
Yeah.
talking about a guy who turned like a small amount of money
Some more, yeah.
into millions and became a U.S. investing champion. But it's not just like the technical stuff. He gets into like the mindset you
Book
need
game. Yeah, exactly. But all the time.
exactly to win in the market.
What's so cool about Minervini is he doesn't just hand you like a set of rules.
Right.
He gives you a framework for thinking about the market. Like he starts with this idea
Right.
of the two wolves.
The wolves.
Yeah. He says inside every trader, there's this battle going on between the disciplined builder and the impulsive wrecking ball.
Oh, I see. Like one wants to create, the other wants to destroy.
Exactly. And, it's like that old story, right? You got to feed the wolf you want to win.
Oh, yeah, I remember that one. So how do we make sure in our trading we're feeding the builder, not the wrecking ball?
Minervini says it all starts with self-awareness, right? You got to be able to spot those moments
Yeah.
when the wrecking ball is taking over.
Yeah.
Like when you're, chasing a hot stock tip just because you're feeling FOMO
Yes.
instead of like sticking to your plan.
Right.
That's when you got to like hit the pause button,
Pause. Yeah.
take a breath,
Yeah. Step back.
and let that builder wolf take charge. It's about being deliberate,
Deliberate. Okay.
not impulsive.
So we're training our brains, basically.
Exactly. Training yourself to react differently to those market triggers. Because otherwise, those emotions, they'll run you ragged.
And you'll end up making those same mistakes
I,
over and over again.
Speaking of training, Minervini tells this story about his student,
Okay.
Darren, right? This guy was so determined to model Minervini's success, he even started shaving his legs. Just like Minervini used to do when he was into bodybuilding.
Haha. Okay. I think I'll stick to my own routine there.
Yeah, probably a good call.
But I get the point.
The point is,
Yeah.
there's power in choosing who you're learning from.
Right. Your mentors.
Exactly, your mentors. Think about those, those elite violinists in Berlin. The study where, like, the top performers...
Oh, yeah, the 10,000 hours thing.
Yeah, they'd all practiced over 10,000 hours. But it wasn't just mindless practice.
Right.
It was deliberate practice, focused on getting better.
So it's quality, not just quantity.
Exactly. And that's what you got to do with trading, too. You want to be modeling best if you want to become the best.
Okay, so we got the right mindset. We're learning from the best.
Right.
But even then, if you don't manage risk, it's all for nothing, right?
You got it. Minervini is all about what he calls a risk-first mindset. And he doesn't mess around with this. Before you even think about potential gains,
Yeah.
you got to know your exit point, your stop loss.
Right, like your emergency brake.
Exactly. It's like, before you even start driving, you set that emergency brake just in case.
Makes sense. He actually compares risky stocks to, like, bucking broncos.
Oh, yeah.
They might look exciting, but chances are you're going to get thrown off.
Ouch. Yeah, and that's not a good feeling in the market.
So setting a stop loss, it's not just about limiting losses, right?
It's actually about, deciding if a stock's even worth buying in the first place.
Right.
This is what he calls backing into risk. Like, if your stop loss needs to be massive just to manage the risk,
Yeah.
it's probably a sign to just walk away.
So, for example, like if I'm looking at a stock and I realize I'd need like a 20% stop loss to feel even remotely comfortable,
Oof, yeah.
that's like a major red flag.
Yeah, that's telling you the stock's got the potential to be super volatile.
Yeah.
And you got to ask yourself, like, is the potential reward really worth that kind of risk?
Yeah.
Minervini's rule is you should never risk more than you expect to gain.
Okay.
It's like, playing a game where you bet $10, but you can only win $5.
Yeah.
Long term, you're going to lose.
It sounds obvious when you put it like that,
Right.
but I bet a lot of people, they get caught up in the excitement
Oh, all the time.
and they forget about the downside.
It's easy to do. That's why it's so important to know your numbers, right?
Okay.
And I'm not just talking about potential profit. You got to know your average win,
Okay.
your average loss,
Yeah.
and your batting average.
Yeah.
Like, what percentage of your trades actually make money?
So we're talking about real data
Right.
from your actual trades.
Exactly. Minervini calls it result-based assumptions versus trade-based assumptions.
Okay.
It's like, think of it like baseball.
Yeah.
You can't just assume you're going to hit a home run every time you step up to the plate.
Right.
You got to look at your actual batting average. Make decisions based on reality.
So if my trading batting average is only like 40%,
Right.
I got to make sure my winners are big enough to make up for all those losses.
Exactly. And that's how you start tilting the odds in your favor. Now, Minervini, he's big on compounding, but he's not just talking about, like, compounding money.
Okay.
He talks about the danger of compounding your mistakes.
What does that mean?
It's what happens when you keep averaging down on losers.
Oh, like you buy more of a stock as it keeps going down?
Yeah, hoping to catch the falling knife,
Right.
but usually you just end up cutting yourself.
Ouch.
He actually quotes Paul Tudor Jones here. He says, losers average losers.
That's harsh.
It's harsh, but it's true. Throwing good money after bad just digs you a deeper hole.
Right.
He also warns about the cheap trap.
Cheap trap.
Yeah, thinking just because a stock has gone down a lot, it's suddenly a bargain.
Oh, I see.
But cheap stocks can always get cheaper.
He uses Cisco as an example, right?
Yeah, Cisco.
Yeah.
After the dot-com bubble burst, it dropped like 90%.
Wow.
Even if you bought it cheap after the fall, you still could have lost a ton of money.
So how do we avoid these traps? How do we find those stocks that are actually ready to, like, take off? Minervini talks about these 4 stages of a stock's price cycle.
Right, the 4 stages.
And stage 2, the uptrend, that seems to be where he focuses.
Stage 2 is where the magic happens, is when you see institutional investors starting to accumulate shares.
Okay.
Driving the price higher, creating real momentum.
So we're not just chasing, like, random price spikes.
No, you want sustained upward movement.
Right.
And Minervini, he doesn't just, eyeball it. He uses a specific set of criteria called the trend template to confirm a stage 2 uptrend.
Okay, and one of the key indicators is the 200-day moving average, right?
Exactly. If the stock is consistently trading above that 200-day moving average, that's a good sign.
He actually uses the example of Bill Ackman.
Oh yeah, the billionaire investor.
Yeah. He lost big on Valiant Pharmaceuticals because he ignored the downtrend.
It's a reminder that even the smartest people in the world can get burned if they don't respect those market stages.
It's a powerful reminder that you gotta know when to walk away, even if you think a stock is cheap or has potential.
Sometimes the best trade is no trade at all.
All right, so we've laid the groundwork here. Understanding market cycles,
Right.
Managing risk.
Big one.
But now let's get to, like, the really exciting part.
Let's do it.
Identifying those potential super performers. That's where Minervini's volatility contraction patterns, or VCPs, come in.
VCPs, those are like footprints, right?
Crits.
They show you the supply and demand dynamics playing out in a stock's price. They can help you pinpoint those perfect entry points.
Okay, so like clues to where the big money is moving.
Exactly. He tells this great story about Netflix versus Blockbuster.
Oh yeah, back in 2009.
Netflix's VCP setup, it signaled this massive potential while Blockbuster was heading for bankruptcy.
And it's crazy because, like, back then, everyone thought Blockbuster was the giant.
Right. Unkillable.
And Netflix was, like, the underdog.
But the VCPs, they showed what was really happening under the surface.
So they can help us see past those surface-level metrics, like, just the stock price.
Yeah.
And understand the real forces at play. But how do we actually spot these patterns? What should we be looking for?
Well, Minervini talks about this thing called volume contraction near the pivot point.
The pivot point, what's that?
It's that moment when a stock breaks out of its consolidation phase and starts moving higher.
Okay.
And when you see volume drying up near that point, it suggests that the sellers are exhausted.
So there's not much supply left.
Right.
But the demand is building.
Like a coiled spring.
We're ready to explode.
Boom.
Okay, so we found our perfect entry point using VCPs.
Right.
But now, how much do we actually invest in each trade? That's position sizing, right?
Position sizing is key. And Minervini gets into some pretty advanced stuff here.
Yeah, he mentions optimal F and the Kelly formula.
Right, but the key takeaway for me is, don't over-diversify. Focus on a few high-conviction trades and size your positions based on your risk tolerance.
So it's about quality over quantity.
Exactly. Concentration, when it's done right, can lead to much bigger gains. But it takes discipline.
And knowing when to cut your losses if things don't go your way.
Absolutely.
This is all starting to come together. We've covered so much already. Mindset, risk management, market stages, these VCPs, position sizing. It's like we're building a toolkit for trading success.
We're just getting started. In part 2, we'll dive into Minervini's strategies for selling.
Ooh, yeah, because knowing when to exit a trade is just as important as knowing when to enter.
You got it.
All right, everybody, stay tuned for part 2. We'll be right back after a quick break. Welcome back, everybody. So we've talked a lot about finding those winning stocks, but now I'm ready to learn how to actually lock in some profits.
Yeah, the exit strategy.
Because honestly, what's the point of a perfect entry
Right.
if you don't know when to sell?
Absolutely. Minervini actually says that selling is even more important
Really?
than buying.
Wow.
It's that moment of truth, right? When you either take those profits
Yeah.
or you cut your losses before they get out of control.
So let's get into it. One thing that kind of surprised me was this idea of selling into strength.
Yeah.
It seems counterintuitive. Like, wouldn't you want to hold on to a stock that's still going up?
It's tempting, I know. But remember, stocks, they really move in a straight line.
Yeah, they go up, they pull back.
Exactly. They go through these cycles. Selling into strength lets you, take profits while the momentum is still strong
Okay.
instead of risking those gains during a pullback.
So it's like leaving the casino when you're up big,
Yeah.
even if you feel like you could win even more.
Better to walk away with a profit than risk losing it all.
Makes sense. So what are some of the signals that Minervini looks for
Okay, so he talks
when
with,
he's thinking about selling into strength?
yeah, selling into strength. One is the climax top.
Climax top, what's that?
It's when a stock has this like sudden, almost vertical price surge, often with huge volume. It's like a
Yes.
rocket running out of fuel.
I can see how that would be a warning sign. He uses Qualcomm as an example, right?
Yeah, back in the late 90s, Qualcomm, it shot up over 260%
Wow.
in just 2 months.
That's crazy.
And then, boom, crashed back down.
So it's like too much, too fast.
Exactly. Too much, too fast. And by recognizing those patterns, those climax top patterns,
Right.
you can avoid getting caught up in that frenzy.
Okay, what else?
Another thing he looks at is the stock's price to earnings ratio.
PE ratio.
Yeah, the PE ratio. It helps you see if the stock's price is still in line with its actual earnings.
Right. It's a good reality check.
So if the PE ratio has gotten really high compared to where it was when the stock, started its run,
Yeah,
that could be a signal to take some profits off the table.
because it might mean the market's getting a little ahead of itself.
Exactly. A correction could be coming.
Right.
He also suggests paying attention to, any signs of exhaustion in the price action, like a series of strong up days, followed by a down day with heavy selling volume.
So, like, the big players are starting to cash out.
It could be. Now, here's a mistake that a lot of traders make. Minervini calls it calling an audible.
Calling an audible, like in football.
Yeah, like when you deviate from your game plan based on, gut feelings or those sudden news headlines.
Oh, yeah, I've definitely been guilty of that.
It's tempting to second guess yourself, especially when the market gets volatile.
Right.
But that's when discipline is most important. Think about it. Sometimes calling an audible can lead to a big play,
Right.
but more often than not, it just throws the whole strategy off.
You got to stick to the plan.
Exactly. Sticking to your game plan, even when it's uncomfortable, that's key to long-term success in trading.
Okay, so we've talked about selling into strength. We've talked about avoiding those knee-jerk reactions.
Yeah.
But can we dive into Minervini's 8 keys to super performance?
Oh yeah, let's do it.
I'm ready to unlock that next level.
These keys, they really build on everything we've been talking about, but they provide like a clear roadmap. Okay. The first key, it's all about timing. Buying stocks in stage 2 uptrends
Right.
and using those volatility contraction patterns to pinpoint your entry.
So it's not just finding any stock that's going up.
No.
It's about finding the right stock at the right time.
Exactly. When it's showing real strength and momentum. And then comes key #2, which might be the most controversial.
Oh.
Don't diversify.
Wait, hold on. Isn't diversification like the golden rule of investing?
That's what we're always told, right?
Yeah.
Spread your risk. Don't put all your eggs in one basket.
Yeah.
But Minervini, he makes a really compelling argument that if you're truly doing your research
Okay.
and you have high conviction in a few specific stocks,
Yeah.
focusing your capital could lead to much bigger gains.
So it's like instead of dipping your toes in a bunch of different pools,
Right.
you're diving headfirst into the one you know has the treasure.
Exactly. And then key #3, turnover, can actually be a good thing.
Turnover.
Meaning actively managing your positions, moving in and out of stocks as needed.
Okay.
It can help you compound your gains more quickly.
So it's not just buy and hold.
Right, you got to be strategic, recognizing when it's time to take profits or cut losses. As long as you're following your rules,
Yeah.
and you have a solid edge, trading more frequently can actually boost your performance.
Okay. Key #4 seems pretty fundamental, maintaining that risk-reward relationship.
Always, always. It goes back to that risk-first mindset. Protect your capital. set those stop losses, and walk away if the risk is too high.
Right. Key #5, cut your losses short and let your winners run.
Ah, classic. Easier said than done, I know.
Yeah, emotionally, it can be tough to let go of a loser.
It's that fear and greed battle, right? But you got to be disciplined. Holding on to losers can wipe out your gains.
Right.
And selling winners too early, that limits your upside.
Okay, key #6, be patient and wait for the perfect setup.
Patience is a virtue in trading, just like in life, right?
So,
Let the market come to you.
don't get FOMO.
The best opportunities will come when you're prepared and waiting for them.
All right, key #7 seems familiar. Only buy stocks that are in stage 2 uptrends.
Exactly.
Yeah.
Align yourself with the prevailing trend. Don't try to fight the market or predict the bottom.
Okay, and last but not least, key #8, trade directionally.
Simple, right?
Buy stocks that are moving up, sell stocks that are moving down.
It sounds obvious, but you'd be surprised how many people try to outsmart the market.
Yeah, trying to pick bottoms and tops.
It rarely ends well. Stick with the trend, let the market show you the direction, and then follow it.
So we've got these 8 keys. It's like a cheat sheet to trading success.
It's a good starting point.
But even with all the best strategies in the world,
Yeah.
there's that human factor.
Oh, yeah. Huge.
Our emotions, our mindset, that can make or break us.
Absolutely. And that's what Minervini gets into next. He explores the psychology of trading, gives you techniques for dealing with fear, greed, self-sabotage. It's like mental training.
Okay, I like that. So we're not just learning technical analysis, we're learning how to master our minds.
What are some of the techniques? Well, one of them is mental rehearsal.
Mental rehearsal.
It's about visualizing yourself successfully executing your trading plan, even under pressure, like practicing your golf swing in your mind before you step onto the course.
So you're mentally preparing yourself for those inevitable ups and downs.
Exactly.
What else?
He also talks about the importance of having a supportive network, other traders, mentors, coaches,
Right.
or even family members who understand, the challenges of trading, people you can talk to, vent to, learn from.
That makes a lot of sense. Trading can be lonely, especially if you're doing it from home, like a lot of people are these days.
It really can. And remember what we talked about before about information overload. He brings that up again,
Oh, yeah.
emphasizing that you got to be selective with the information you consume. Focus on sources that align with your trading style and your goals. Yeah.
Right. Tune out the noise.
Tune out the noise. All that noise can just clutter your mind and lead to bad decisions.
It's about staying focused on the plan, not getting distracted by every headline.
Right. And every tweet.
Yeah, exactly. Every tweet. Which is easier said than done, but definitely something I'm working on.
We all are. Another thing they talk about is taking breaks.
Breaks.
Yeah, trading, it can be mentally and emotionally draining.
Oh, yeah.
So it's
Yeah.
important to step away from the charts regularly, recharge your batteries, come back with a fresh perspective.
That's so true. It's easy to get caught up in it
Right.
and forget to take care of yourself.
But if you're burnt out, you're not going to make good decisions.
So true. And I love this last point. They talk about celebrating your wins,
Oh, yeah.
both big and small.
It's easy to get caught up in chasing that next trade.
Right. Yeah.
Forget to acknowledge your progress.
Yeah, we're always focused on what we haven't achieved yet
Right.
instead of appreciating how far we've come.
So take the time to celebrate those milestones.
Yeah.
Whether it's a profitable trade, a new skill you've learned,
Right.
or just sticking to your plan for a whole week.
Yeah.
Those small victories, they add up over time.
They keep you motivated.
Exactly.
I love that celebrate the wins. It's a great reminder to, enjoy the process, not just the destination.
It's all about the journey.
Okay, so we're back for the final part of our deep dive into Think and Trade Like a Champion.
Think and trade like a champion.
And I'm really excited to get into this conversation
Yeah.
between Minervini and the performance coach,
Derek Robbins.
Sherrick Robbins. We've talked about mindset already,
Right.
but I want to hear their take on building that unshakable mental toughness
Mental tough.
that champion traders seem to have.
They really get into it.
Yeah.
Like what it takes to be at your best,
Right.
even when the market's going crazy.
So where do they start? What's their first
Well, they start with habits.
habit?
Yeah, habits. Minervini, he says trading success, it's not about making one amazing trade.
Right.
It's about consistently making good decisions
Over time.
over time.
Yeah.
And that's where habits come in.
Because our habits determine our actions, and our actions determine our results.
Exactly.
So if we have bad habits,
Yeah.
we're going to make bad trades.
Even if you have the best strategy.
Right.
it won't matter.
So how do we, like, break those bad habits? How do we replace them with good ones?
Well, first, you got to be aware of them.
Okay, awareness.
Awareness. You got to recognize what triggers your bad habit.
Like, what are those cues?
Yeah, the cues.
Okay.
They talk about this book, The Power of Habit by Charles Duhigg.
Oh, yeah, I've heard that.
He breaks down habits to 3 parts.
Okay.
The cue, the routine, and the reward.
Cue, routine, reward.
So let's say your bad habit is chasing those stocks that have already gone way up.
Oh, yeah, classic FOMO.
Right. So the cue might be, seeing that stock all over the news.
Good.
The routine is you buy it without thinking.
Impulsively.
Impulsively.
Yeah.
And the reward is that, excitement.
That feeling that you might get in on this, like,
Huge winner.
huge winner.
Which usually turns into a big loser, right?
Yeah, more often than not.
So to break that habit, you got to interrupt the routine.
Okay.
Like, instead of buying immediately, you could have a rule that you always wait 24 hours.
Okay.
Do your research before you make any decisions.
So you're basically, like, rewiring your brain
Rewind
to respond differently.
to those triggers. It takes time,
Yeah.
but it's worth it.
Okay, so we're managing our habits.
Right.
But another big thing in trading is fear.
Oh, yeah. Fear is huge. Everyone deals with it.
How do they suggest we handle that?
Well, Robbins, he has this interesting way of looking at fear.
Okay.
He says fear is your nervous system asking,
Okay, what?
are you prepared?
Ooh, I like that.
So if you're feeling a lot of fear about a trade,
Yeah.
it might be a sign that you haven't really done your homework.
Like you haven't thought through all the scenarios.
Right, exactly. And that's where mental rehearsal can help.
Okay.
By visualizing yourself in different situations, both good and bad.
Right.
You're training your brain to stay calm under pressure.
So it's like running those fire drills.
Yeah, fire drills.
You practice what to do.
So when the real fire happens,
yeah,
you don't panic.
Okay, that's a great analogy. Anything else on the fear management front?
They talk about the importance of having a support system.
Okay.
People you can talk to.
Yeah.
Who understand trading. Friends, family, other traders, mentors.
It can be lonely.
Yeah, it can be really isolating. Having that support system makes a big difference.
They also mention information overload again.
Oh, yeah. That's a big one.
How do they suggest we handle that?
Be selective. Focus on the information that's actually helpful to you.
Right. And ignore the rest.
Yeah, all that noise can really mess with your head.
It's like going to the mall, you know?
The mall?
Yeah, if you go with a specific list, you're not going to get distracted by everything else.
Right, stick to the plan.
Exactly.
Okay, what else?
They talk about taking breaks.
Breaks.
Trading is tough, mentally and emotionally.
Oh, yeah.
You got to step away.
Recharge.
Recharge. Come back fresh.
Otherwise, you're just going to make bad decisions.
Exactly.
And I love this last point they make.
What's that?
Celebrate your wins.
Oh, celebrate or small.
It's so easy to forget to do that.
It is. We're so focused on, like, the next trade.
Right, always looking ahead.
That we forget to, like...
enjoy the moment.
Yeah, enjoy the moment.
So celebrate those milestones, whether it's a good trade, a new skill, or just sticking to your plan for a week.
Their small wins add up over time.
Absolutely. Keeps you motivated.
Well, I think that about wraps up our deep dive into Think and Trade Like a Champion.
Think and trade like a champion.
It's been really eye-opening.
Lots of great stuff.
Yeah, lots of great stuff. I feel like I've not just learned some strategies, but I've gained a whole new perspective on what it means to be a successful trader.
That's what Minervini does.
Yeah.
He doesn't just give you rules.
Right.
He helps you become a better trader.
A better person.
And a better person, yeah.
So, any final thoughts? What's the one key takeaway you would leave our listeners with?
I would say trading success, it's a journey, not a destination.
Journey, not a destination.
Yeah, it's about constantly learning and growing.
As a trader and as a person.
Exactly. And by embracing those principles that Minervini talks about,
Yeah.
the risk-first mindset, the focus on those market stages, the VCPs, the importance of mental rehearsal,
Yeah.
managing your emotions, you can set yourself on the path.
To becoming a champion trader.
A champion trader.
That's great. Well, this has been an amazing deep dive.
It has been.
And I want to thank you for
Yeah.
sharing your insights with us.
My pleasure. Always fun to talk about this stuff.
And to all our listeners out there, we hope you enjoyed this deep dive into Think and Trade Like a Champion.
Great book.
Remember, the journey to trading success, it starts with a single step.
One step at a time.
and the decision to become the best trader you can be.
Couldn't have said it better myself.
Come in. Till next time, happy trading, everyone.